Good morning and welcome to the 14th Gulf Intelligence Global Energy Outlook Forum with 20 sessions over 12 hours, bringing crystal ball forecasts for the year ahead by the top 50 energy market analysts from Shanghai to Houston. And we welcome to the table Mr. Michel Gilsing, member of Executive Board and CFO of BOPAC, and longtime friend of Gulf Intelligence and a longtime stakeholder in Fujairah. So welcome, Michel. Nice to have you back.
Yeah, good morning, Sean, and good to see you. Happy New Year, of course, and look forward to this session and our interview. So, and good to see the fantastic initiative you organize with this forum as well. I think a very nice show.
Thank you very much. Yeah, it's not every day one gets to have the opportunity to have 50 conversations about the outlook for the year ahead. But it is a year, Michel, where the price of money is very relevant to all our industries, of course, and particularly in building out the infrastructure of oil storage and also the trading opportunity of oil storage. Need a lot of access to capital for that. I wanted to kick off with your insights at the beginning of 2024. We appear to be at the beginning of a year where the price of money is going to get cheaper according to all market forecasts after a year in which the price of money in the tightening cycle of 2023 saw interest rates climb quite dramatically. What impact will the end of the rate tightening cycle have on the oil storage industry in 2024 and beyond, indeed? Your thoughts on that?
Yeah, still to be seen, first of all, whether there will be any rate cuts. It looks a little bit less certain than maybe a few weeks ago. So I think there's still quite a bit of uncertainty whether it will happen. What we have seen over the last years, at least, with increasing interest rates and also increasing inflation, obviously building new infrastructure is less attractive than it was before. When we had low interest environment, still relatively low construction costs, it was easier for people to build new infrastructure. So in terms of existing capacity, the market is still in good shape. If you have your financing in order, then it should be in good shape. So you have less competition of new projects coming online. The other thing which changed quite a bit in our industry, in my mind, is there is less appetite from financing institutions to finance new oil infrastructure. So that is also
even storage.
Even storage, I think people are saying, well, if you build storage, you also facilitate still the growth of fossil fuels, and that's maybe more in Europe than it is in Asia. But overall, I see far less expansions taking place now and also going forward than what we have seen over the last decade, when there was still quite a bit of expansions. Take Fujairah as an example, rapidly expanded over the last 10, 15 years. But that will most likely all slow down a bit because not only because of the interest rates, that's not the only reason. There's more reasons. And people also are a bit more maybe uncertain on what is the ultimate future of oil. So if I build something new, when is peak oil really coming? So when am I more?
We had an interview earlier today with S&P Global Commodity Insights, who have called peak oil demand as early as 2030. So that's not very far away.
Yeah, it's not far away, maybe, but it's always every prediction is always further away than it was. So I'm a little bit more, how you want to call it, pessimistic or optimistic, from which point of view you look at it. But I think peak oil still seems to be quite a bit out, and the demand for oil is still going up quite a bit. We will need infrastructure. It puts extra pressure on infrastructure at the moment because of the lack of expansions in the market. So it is on top of, let's say, the security drive for energy. It makes the system, in my mind, relatively tight to what the market still is and is looking for. Maybe once we reach peak oil, that picture is going to change. Whether that's 2030 or maybe later than 2030, that's to be seen. But definitely with some idea of that there might be a peak oil, it is harder for people to invest in assets today. Because if you build an oil terminal, you don't build it for 10 years, you build it for 30, 40 years. And that means it has an outlook to 2050, 2060. And that's quite hard for people to justify that.
If we look at just then, as you said, there's many reasons why you indicated that maybe further investment in new infrastructure may not be forthcoming. But if we look, just focus on the price of money and look in the rear view mirror when money was very cheap and easy to access, that was it a period in which maybe too much investment, too much in the context of storage, maybe the access to capital facilitated the building of too much storage, and now with more expensive money, it would be a good time for the industry to consolidate a bit. Your thoughts on that? The idea of easy money building too much capacity, and maybe expensive money acts as a sort of consolidating factor. Your thoughts on that?
Very good question. Looking in the rear mirror, then I would say that I don't have the feeling that the oil market overinvested in oil infrastructure. If I look at the key markets, if you look at Europe with Rotterdam market, maybe if you look at Fujairah, you could maybe say there were some periods of overinvestment, maybe a bit ahead of the curve, but ultimately the curve was still landing in such a position that the capacity is fully utilized. Singapore market still relatively tight. I think if the geopolitical pressure wouldn't have been there, obviously that would have been less impactful on storage than it has been. So maybe if we wouldn't have had the Russian-Ukrainian conflict and maybe some other geopolitical pressure, then you could say, well, maybe then there was an overinvestment in certain markets. But with this geopolitical pressure, look at the market like Fujairah, where a lot of products are being stored from different destinations, and our infrastructure is required. It doesn't look like there has been overinvestment. I think there is a risk, as I said before, there is a risk that you may face a period of maybe underinvestment because of the less attractive propositions to expand on oil, and as a result, the system might be a bit more tight, even in this geopolitical situation, or if the geopolitical situation gets worse than it was today. Still to be seen what's going to happen in the Middle East, for example. That may put additional pressure on supply chains, and what we see is that when there is a lot of pressure on supply chains, there is less just-in-time flow of products. People tend to take a lot of buffer storage, and as a result, people want to make sure that there is product at a certain moment in time in the market. Also, governments want to make sure that there is sufficient products available to serve the energy demand.
Well, if we take that point of the sort of the East-of-Suez focus, and you mentioned Fujairah, in 2023, and as we go into a new year now, 24, last year we saw a massive increase in the amount of refining capacity in the region. Over 1 million barrels was added. Very large refinery in Kuwait, Al Zour, another refinery in Oman, and other upgrades in Bahrain. A significant additional capacity, and then also now with the optionality of moving products to the West, which is kind of a new idea with the change of flows on the back of Russia's invasion of Ukraine. Maybe the question being, is the region under capacity, and that Fujairah the region needs more midstream storage in order to facilitate all of this growth? Your thoughts on the emerging scale of the Gulf as a global actor, as a global player, and not just a regional one, and that maybe more capacity would be needed to facilitate all of that?
Yeah. I think on the Middle East, the developments, the investments in refineries, we have always been very positive. So we think it's a very good way of supplying, let's say, the demand centers which are in the east, but also in Africa and different areas, and maybe even going to the west, which is taking place. I think that that production center has become even more important than what it was given, let's say, the Russia-Ukraine conflict. So there is even more opportunities, I think, for the Middle East to perform very well with these assets. So
Is there the storage there to give that arbitrage optionality?
It looks a bit tight. If I look at what's happening at our facility in Fujairah, if I look at the contract structures we had some years ago versus what we see today, people are more keen on securing capacity longer term. So in the past, we had a lot of short-term contracts, sometimes even for a week, and most of it up to a year. But now you see that people are more they want to be more certain that they have the capacity available, which is a signal of like, okay, I don't want to give up on capacity because I may lose my market position. So it seems more tight, and maybe there are opportunities, but I don't have a full market overview on that. So don't hold me on this, but there might be opportunities to maybe even further expand in that market, given, let's say, the increased profile of the Middle East as a production center for many different countries around the Middle East. So yeah,
well, especially when you look to you've got the increased capacity on the refining side, which we already mentioned, but you also have an outlook where in the UAE we're looking to increase oil production to 5 million barrels a day, but at the same time, and cutbacks in OPEC quotas. And a greater outlook of responsibility, perhaps over you mentioned the sort of peak oil period ahead, that will bring more opportunity and responsibility on the Gulf producers, because they, of course, are the low-cost producer. They will certainly be the last man standing if indeed we do move towards anything towards peak oil. And so all of that signaling the need for more and more midstream infrastructure.
Yeah, I agree. I think it's look, the market for oil is still growing. So as a result, you need to make sure that you have sufficient exploration, production centers, midstream assets to facilitate it. Well, you could blame the market saying, well, you're still investing in fossil fuels and growing the oil market. On the other hand, that is what the world requires at this moment in time. If there is other streams being developed, okay, then we will invest in other infrastructure. But as long as this market is still what we need as a world, then obviously the infrastructure should match the demand in my mind. So yeah, that should still provide opportunities. That's what I'm also telling our investors, is because a lot of investors say, well, ultimately your oil assets may be stranded assets, but my story is for the coming 7, 8 years, guys, the market is still should be good for us, given the fact that there is infrastructure required. The market is growing, and there's not a lot of people who are expanding in this market. So for the reasons I told in the beginning, so don't be too pessimistic on these assets. In the meantime, what we will do as a company, we will convert some of our infrastructure for lower carbon products. There's a lot of bio-based products coming into play. The bio-bunkering is starting off. Now, biodiesel we have seen for many years. Sustainable aviation fuels, that's all coming into play. And that will also require additional storage and additional infrastructure. The energy content of most of that products is less than what we have with the traditional products. So as a result, per energy component, you need effectively more storage. So that also should put the midstream assets in a positive vibe. It will most likely happen in the same locations because you will ultimately blend these products into the traditional products. So also that provides an opportunity in my mind for storage companies to play in.
What about if we talk again east of Suez, the rise of India? I mean, India is not far from us here in the Gulf. It is growing still as at the beginning of what would appear the foothills of of a long journey of potential economic expansion. How should the industry sort of adapt to that? We saw Singapore grow to ginormous capacity storage-wise and bunkering, the biggest by far in the world, based on the back of a 30-year China growth story. What does India present for the midstream infrastructure, do you think, in this region?
Fantastic opportunity in my mind. So India will grow to 1.8 billion people. That's a simple, it's a simple calculation. The wealth of India will go up. Everything you read about India is fast growth. Even the last growth predictions are more positive than the previous one. We have been quite a heavy investor in India in the last 2 years, effectively. We have a network of terminals. And what we see is many expansion opportunities. We are not per se in the oil play in India, so we are quite limited in oil. We have more on the gas side and on the chemicals and on the bioproducts. But there is a lot of demand for infrastructure, and that's also what the Indian government is well, definitely.
They seem to be prioritizing the expansion of oil storage capacity as they're well below the IEA recommended 90 days of net imports.
They have to. I think the whole India economy with its growth needs infrastructure, needs also to make sure that the energy is secured to keep the economy growing, but also to provide continuity to the economy once there is a crisis. And I think that's more in the forefront than ever before with the Indian government as well. So we are happy to further expand in India, and I guess a lot of other parties will also put capital into India to facilitate the journey of India.
Is there commercial private sector opportunity there? There's the whole long sort of legacy of complaints that the government bureaucracy, government control limits the opportunity for private investment, FDI, but has that paradigm shift happened now?
Yeah, I can't speak for the whole market, but if I look at ourselves, we don't see that limitation. So we see actually that the Indian government, and it always takes time to develop a terminal, of course. It's not like you do it overnight, but the pace in which we can develop in India is actually quite good, sometimes compared to other countries. So we don't feel it is a very bureaucratic process, or there are many hurdles which we don't face in other countries. There is quite a sense of urgency to make sure that infrastructure comes into play. Well, for example, to give you an example, we are quite heavily expanding on LPG in India because the population in India needs to move away from wood and kerosene to LPG, which is
for domestic cooking.
Yeah, which from a health point of view makes a lot of sense, and also from a life.
The same in Africa, obviously.
Yeah, and also from a life quality point of view. So the opportunities we get to just expand our LPG capacity in India is fascinating, first of all, and goes with high pace in my mind. So, and that's
does
also
all of that offer an opportunity for Fujairah? I mean, as the regional bunkering and storage here, does it give Fujairah an outlook for interconnection with India from that point of view with the growth of India?
Yeah, well, as I said, we're not very much into oil in India, but what I could see is that, and that's what Fujairah is doing more and more, is the blending on the gasoline side. So Fujairah has taken quite a bit of market share away from Europe to blend gasoline, which maybe originally took place for a lot in Amsterdam, for example, in the Netherlands. You see that partly moving now to the Middle East. And I would think with the more refining capacity coming on stream in the Middle East, that more blending is required for the different countries around the Middle East, amongst others, India. So
we could probably do with more blending capacity in Fujairah. If you think about where you would invest in infrastructure, that might be one area.
Yeah, no, definitely. I think that's an area to really see potential growth for Fujairah as a facilitator of the demand in the different centers around the Middle East. And it would be a nice add-on to the refinery capacity, which is which is already nicely developed in the Middle East. So,
if you look at the year ahead, 2024, Michel, one of the big sort of advancements from the point of view of Fujairah and the region as a whole is the ADNOC storage is due to come on stream. Over 42 million barrels of crude oil cavern storage that's divided into three separate caverns, 13 million barrels or 14 million barrels, I think, each one. Nonetheless, a massive increase in crude oil capacity storage in Fujairah. What impact do you think that's going to have, could have, in developing the market here?
In Fujairah, I guess this is, but I'm not aware what ADNOC's ideas are on this storage facility. So it may be a bit
hard. The general guidance is, at least from their original proclamation, was that it would be both strategic and commercial.
Yeah.
And with their connectivity to the manifold system in Fujairah, it gives all options, and not only from the export point of view of using the VLCC, but also connectivity to the rest of the terminals in Fujairah.
Yeah, in my mind, I see it more as an add-on to Fujairah. So it's definitely crude play. So ultimately, it will go to the refineries around the world. So that, in my mind, should help ADNOC's position worldwide to make sure that they have a good market share in the international world, especially with the growing demand for oil. Still, it makes a lot of sense to expand on the crude oil side and to make sure that you have a position there. Will it have a positive impact on Fujairah? I think if it's just exporting crude oil, probably that will be neutral for Fujairah. It's not going to have a negative impact on Fujairah because Fujairah has a different play in terms of bunker and in terms of gasoline and middle distillates. So I would think that the storage facility of ADNOC probably is neutral to Fujairah, but overall,
what about if it was onshore traded and given the optionality there, if it was to move between different terminals, would that be a game changer?
If it would move between, yeah, well, obviously, if you could combine it with different streams, yeah, that might be useful. Would you blend it with other crude streams? Maybe you would do it, although what I understand from refineries that most of the time they'd like to blend it close to the refinery. But I might be wrong there. As I said, I'm not an expert in this field. That if that blending would take place in an area like Fujairah, taking into account the streams of ADNOC, yeah, that could be helpful. But to be honest, that's a bit speculation.
Yeah, of course. I mean, 42 million barrels is a lot of oil. Murban, of course, already comes to Fujairah and is exported there. But these are three different caverns in which can facilitate other crudes, which could arrive in Fujairah by VLCC or by other marine. We'll have to see, but it's certainly a big development with still some questions into 2024. I just want to finish up, Michel, just looking at the structure of the market. We've been very much in a backwardation market for some time after the period of COVID, where there was a big contango and a lot of opportunities were in that period. But now a market that looks like it's sort of settled into backwardation. Is that an inhibitor for structural investment in the infrastructure? Is it good for the industry, bad for the industry? How do you see the outlook for the structure of the market and its consequence for the industry in 2024?
Yeah, there are many answers to this question. Well, the market has been quite a bit in backwardation for years. Does it impact us as a company? Not really. We don't have a lot of contango play in our portfolio. Even when the super contango was there during Corona, we were not benefiting a lot because we didn't have a lot of capacity available. Most of our capacity is distribution oriented, so just make sure that it comes from a production facility and goes to an end market for consumption, for driving, flying, whatever. So I don't think that has a major impact. Obviously, if there is a contango, it would even put more pressure on storage. That's for certain, because then there will be more appetite for people to store products, and it will put an additional pressure on the existing system. So if tomorrow the market goes from backwardation to quite a significant contango, I think that's going to be, well, obviously beneficial for storage companies, but it will put an extra pressure on infrastructure, which may also create some issues maybe on the distribution side, because then there may be a lack of capacity on the distribution side. So given that there is quite some demand for oil, first of all, there is a drive for energy security. We have a lot of geopolitical pressure. Maybe that we have a backwardated market is actually to keep the system flowing as it is maybe not a bad thing. If it moves to contango, obviously it will put more pressure on the market. But as I said, that's not going to be negative for midstream companies. Certainly, will it lead to additional investments? Yeah, if you maybe are a trader and you want to benefit from contango, but then you also need to make sure that you see a long-term contango before you start really investing into assets.
It's hard to see.
That is probably not so easy in my mind.
Finally, Michel, the beginning of the year 2024, I mean, 2023 was full of surprises and black swans. As you look out to 2024, what are you keeping your eye on that could be a black swan or of some description to be disruptive in your industry?
It's hard to predict the black swans. That's why they
exactly.
why they are black swans. But
what's out there? You've mentioned geopolitics quite a number of times in your interview. Obviously, that's preoccupying you a little bit.
No, I think the Russia-Ukraine crisis. Obviously, what's going to happen with that crisis? How long is Europe and the US going to support the Ukraine? Is it going to lead to the standstill we almost have today? Is there going to be major changes there? What's going to happen with the US elections? Is that going to change, let's say, the power in the US? And as a result, it may give different views and ways on how the US is acting in the world. The Middle East conflict is something to clearly watch for us as well. That's a major issue and challenge. But there could be others, like what's going to happen with China. Is China really coming back to the economy? Well, it is progressing, but slowly progressing.
But also changing quite dramatically, right? China is moving from essentially a build economy to one that wants to think in a way, be a service-led and less energy intensive.
Yeah, correct. And then, how much market share did China lose to India? Is India really able to grow like it does today for many years, or will there be hiccups in the growth? You never know. Of course, that is keeping myself busy as well. So there's a lot of uncertainty, and probably, as I said, you can't predict the black swan, but something will happen during 24, like we have seen in 23, 22, 21, which is unexpected. But for us,
it seems these black swans that are coming that have come in recent years have been substantial in their impact rather than minor ones. And let's hope that whatever comes this year.
But I'm always amazed, even with these black swans, if you look at the supply of energy, how well the world still can adapt to changes. So whether it's Corona or whether it's the Russian-Ukraine situation, whether it's the Middle East, the world always changes quite rapidly in terms of changing its flows. And so for whatever reason, there is also a bit of resilience in the system.
Absolutely.
So that makes
the oil price looks rather calm given all that's going on. There's certainly very little geopolitical risk premium currently in the oil price, which may be a reflection on the amount of idle capacity there is and to absorb any shocks. We're going to have to leave it there. It's absolutely been wonderful to catch up with you, Michelle Gilsing,
Yeah.
member of Executive Board and CFO of Vopak. Great to have you back at our table, and look forward to your continued partnership and engagement with us. Thank you for joining us on the Global Energy Outlook Forum 2024.
You're more than welcome, and thank you as well, Son, and I wish you a very good event.